What's up, everybody? Welcome to the Stocks Channel. In today's episode, we're going to bring you a stock market technical analysis weekly update. But before we get into it, you know what you gotta do. Smash that like button and subscribe to the channel to follow along on all of my updates. Now let's go ahead and crack open the chart of the ticker symbol SPY, which is the S&P 500 ETF, and see what's going on in the stock market. Alright, so if you've been following along on this channel, you know that the theme of the week has been panic is not a strategy and fear is not a trading strategy either. And you can see we finished out the week with a new 52-week high close. Now it's so important to follow the price action and follow the technicals, and we see another close of the price above the 5 EMA, and we still see a very bullish trend with the 5 EMA well above the 13 EMA and the 20 simple moving average looking very nice with this upward attacking slope. So overall, there's still a lot of bullish momentum in this market, and we do still have a price target about $2 higher at 341, and we had a close today of about 339. So there is some upside price target still left with our price target of $341. And that's not to say the market has to stop there. We do have other price targets above in the 350s as well. However, let's take the market one step at a time and follow the price action and follow the trends. And right now, all signs point to we are going to see this $341 price target on the SPY ETF. Now remember, we do have downside risk and we do have two gaps below us in the very near term that in any event that we do have a correction, that would bring us down to about a 3.8% pullback into support. Now there's still a lot of support below us, and finding support only about 3 to 4% lower would be a very healthy correction for an upside to continue. So remember, we do say that we're in the fifth wave of the Elliott wave analysis, and eventually we are going to see the stock market go through a correction. So what exactly will that look like? Well, if we get to our price target and then go through a correction, we would expect to see a pullback into an ABC pattern before ultimately resuming the upward trend. Now, before we say we go into a correction, we need to see a reversal of this bullish trend, which we have yet to see. So right now, a correction is just a saying that we are going to see in the future. We're not telling you exactly when to expect that correction because right now there's still a lot of bullish momentum and we're not calling a top. Now there's other studies with cycles and things like that, but they don't always have 100% probability, just like nothing does in the stock market. So we're going to continue to watch this price action and watch these trends unravel before we decide when we're going to see the top of this run. So we still see a very bullish price action with the price repeatedly closing above the 5 EMA and the price continuing to march higher. So let's take a look at some of the other sectors that are driving the S&P 500 and see what's going on with them as well. So let's jump over next to the NASDAQ 100. We're looking at the QQQ ETF, or the triple Qs, and we see another very bullish close on the NASDAQ 100 Qs ETF. Now with the NASDAQ 100, we did see a brand new all-time high close, and we did see the price action exceed our price target of $280 that we've now been mentioning for over a month. So our price target on the NASDAQ 100 has been reached, and we're well within striking distance of our price target on the S&P 500. Now that we've hit our price target of $280, we need to start looking at other price targets above there for possibilities of new price targets. And on the NASDAQ 100, that next price target that we would be looking at is about a price level in the $292 range. So we do still see some upward potential on the NASDAQ 100 as well. And as we've seen with technology and the pandemic going on, as technology's been leading the way in this bull rally, and it's not surprising to see the strength in technology well exceeding our price target with today's close about $1 or $2 above. So we do have support on the NASDAQ 100 about $270, which would be about a 2.5% drop from today's close before finding our first level of support. Now remember, with bullish trends, we do expect to see support hold up on the moving averages, and we do have the price trading above the 5 EMA and the 5 EMA still trading above the 13 EMA. So the trend is still very bullish. We could find support at the 13 EMA and the 20 simple moving average and still maintain this bullish uptrend as long as we see that act as support and the price bounce and continue to head higher. So overall, technology is still looking very strong and very bullish, and this upward trend is still showing no signs of slowing down anytime soon. To see a sign of slowdown, we really need to see the price action close below the 5 EMA, and we need to see some weakness in that 5 EMA and have it close below the 13 EMA, which we have yet to have throughout this bull rally. This whole entire time, the 5 EMA has remained above the 13 EMA as the momentum is very strong, and the price action is telling us that do not expect a reversal just yet. So now let's jump over to the Dow Jones Industrial, and we see that we're looking at the DIA ETF, and we do see that the Dow Jones did seem to bounce off support yesterday and we did see a solid close today, closing up about 0.7% higher than yesterday. So we see the industrials and the Dow Jones still showing a very strong bullish trend as well. So it's very good to see all three indices with the S&P 500, the NASDAQ 100, and the Dow Jones Industrial all still looking very bullish and forming higher highs and higher lows. So all of the trends are still bullish, and the stock market as a whole is still looking very good right now. We do see the price action does have a close above the 5 EMA. So it looks like we may have got into our bounce of our support level that we've been talking about all week long. And now we're looking to capitalize on this bounce and go up here to the $290 level and close the gap from the crash in March. So remember, with the gap close, that brings the Dow Jones right in line with the S&P 500 and NASDAQ 100, who's already closed that gap and starting to form new all-time highs. So the Dow Jones is playing a little bit of catch up. And there's a lot of potential with the Dow to have some sort of rotation in money where people are moving their money from the technology and healthcare and other sectors that have already performed very well. And they may start rotating into the industrial sector, which would expect to see some strength in the Dow Jones continue, and watch the Dow Jones continue to break these resistance levels above us and head to new time highs as well. So right now, everything's still looking very bullish on the Dow Jones, and it's really nice to see that this resistance level breakout acted as support, and we did get a confirmation bounce. So we now know that that level is support, and we'll look for that level to maintain throughout this rally as we continue to head higher on the Dow Jones Industrials. So let's jump over to the VIX, which, as you know, is our fear indicator, and we did see some fear this morning with today's open. However, you saw that that fear phased out throughout all day long, and we did close on the VIX lower today, which is a very good sign because we want to see fear exit this market as we expect the market to continue to head to new all-time highs. The VIX does seem like it did find a bottom and starting to bounce, and that is the warning signal that we need to pay attention to, because the VIX is our fear indicator, which tells us as fear starts to enter the market, we would expect to see that correction that we've been mentioning. So the VIX is still under our 23.5 level, but we do see a sort of pivot bottom here, and we're starting to see the VIX start to find some support at the level it bounced off of in the 21 range. And now we're starting to see the VIX slowly creep up higher. So while it's nothing to panic and nothing to be too scared about, it is a warning signal that we need to pay attention to. So we're going to continue to monitor the VIX, and we're going to see if it closes above this 23.5 level that we've been watching for many weeks now. So let's get into some of the other sectors. And first up is, of course, the financials. And the financials did break below our upward trend line, and we did have two closes below that trend line. And we're starting to see the 5 EMA come down and close below the 13 EMA, as well as below the 20 simple moving average. Now, if you remember me saying last night, I'm not too worried about this breakdown in the trend line just yet, because our strongest trend lines and our strongest support levels are really going to be these horizontal levels, which we have yet to come down here and test. So if we come down here and we test this horizontal support and bounce, I still think we're going to see a test of the 200 simple moving average in the financials, and ultimately we're looking for the financials to break to a higher high. Financials have been the weakest sector of all, and we have yet to see the financials break out of our wedge and form a higher high. So look for financials to hold up on support, and if they don't hold up on support and they break down below as if that support wasn't there, that's going to be a huge warning flag for the stock market, because the stock market should not be going to new all-time highs while financials are breaking down and breaking below and looking bearish. We want to see the financials bounce and get up and join this rally very soon for us to feel confident in this rally to continue for many more days. So let's jump over to the industrials, and we see the industrials did find support on the 13 EMA, and we did get another confirmation bounce today. So we're going to look for the industrials to consolidate this monster move that we had and continue its move higher once support has been found and the consolidation period is over. So overall, still looking very bullish on the industrials, trading above the 200 simple moving average, and the 5 EMA is still above the 13 EMA, and we do have this nice upward sloping 20 simple moving average still. So overall, the industrials are still looking very bullish, and I would expect to see this trend continue and form new highs in the coming days, only bringing the S&P 500 closer to our price target and possibly breaking into the 350s as mentioned before. Now let's go ahead and jump over here to the healthcare sector, and we did see the healthcare sector close above the 20 simple moving average yet again, and we still see the 5 EMA is still above the 13 EMA. So healthcare does seem to be in this long consolidation phase, and it's really just been going sideways with a little bit of a breakout before ultimately coming back and finding support again. So I'm looking for the healthcare sector to still come up here and start getting ready to go on its next leg higher and form new all-time highs, but it's still consolidating and taking some time off the clock and digesting these recent gains that it's had. So overall, healthcare still looks bullish. There's no real concerns on this chart, and it's still closing above the 20 simple moving average, which is still a positive sloping average, which is still a very bullish trend that we have on the healthcare sector. So let's jump over to the US dollar. We're looking at DXY here, and we see that the dollar actually had a pretty good day today. Now, I still think that the dollar could just be bouncing during its downtrend and consolidating its downward move, and we really need to see the dollar break to a new high before we say that the dollar is officially done on this monster of a downtrend that it's been in. So right now, it's too early to say, but we do want to pay attention to the dollar, because as strength returns to the dollar, we're going to see a correction in the stock market, and we're going to see some of these asset prices come back down to reality. Right now, as long as the dollar remains weak, we're going to continue to expect to see these asset prices inflating, which is only going to further our point that we're going to see new all-time highs in these indices. So look for the dollar to test these support levels and these resistance levels, and we're going to see if it's going to break to the downside or the upside, which is going to give us further information on what we need to plan for the stock market as well. So if we jump over to gold, we do see that gold broke to a new all-time high and is holding that all-time high as support, but we do have this sort of triangular consolidation pattern, and we really need to let this pattern finish out and see if we're going to break to the upside or the downside. Right now, I would have to give benefit of gold breaking to the upside, because we do expect the dollar to continue to weaken. So as the dollar weakens, we would expect to see these other asset prices continue to inflate. But you really don't want to guess on a wedge consolidation on which direction it's going to break out as far as trading goes. Wait and watch until you see which direction it breaks, and then enter your trade after that happens. So right now on gold, we still need to wait a few more days to see how this consolidation in this wedge is going to end. Are we going to get a break to the downside, or are we going to break out and continue to form new all-time highs? So we're going to continue to cover Apple on this channel because it's a market mover, and Apple had an absolutely insane day today, closing up over 5%. So we see Apple is still very much in the FOMO state, and we see people flooding into this stock like it's the best thing ever. Now, Apple is a great company, but these valuations are getting very stretched, and we're waiting to see if Apple is going to go through a correction to give us an indication that the broad stock market will also be going through a correction. But right now, as you can tell, Apple's still extremely bullish, trading well above its 5 EMA, and these moving averages are really starting to split apart and show that there's so much strong momentum in the upward direction right now. So do not try to call the top on this market. It can stay irrational far longer than you would imagine. The market could continue to go higher for days or weeks or months. We don't know, so we're going to continue to watch these price actions and watch these trends, and we're going to stay objective about the stock market. So right now, even though Apple should probably need to come down and go through a correction and cool off before heading higher, it doesn't care what anybody thinks, and it's doing exactly what it wants to do, and right now that's go higher. So we're going to continue to watch Apple, and I still expect Apple to come down into the support level and balance before ultimately heading higher. This would be our ABC correction, and that is what we first want to see, is some sign of weakness in Apple to tell us when to expect a correction in the broad market. So if we go back to the S&P 500, you can see it's still very bullish, and there's no reason to be a bear or to try to short this market right now. As long as the dollar remains weak and the stock market continues to grind higher, we expect to see these assets continue to inflate, and we expect to see a lot of money continue to move into stocks. And as you remember, bearish sentiment is still very high on the market right now, so there's still a lot of money that's not being put to work yet, that's still on the sidelines, and there is a very real chance of a FOMO short squeeze, which we could easily see the prices short squeeze into these 350s before we ultimately see our ABC correction. So be patient and continue to watch the price action in these trends, and don't try to predict the top. Let the price action tell you when the reversal's in, and we could expect that correction before making any major moves in the market right now. If you're out of the market, I would probably just stay out of the market until we have a better buying opportunity. And if you're in the market, I absolutely would not panic sell, because there's no indication that this market is ready for a steep correction. It's actually the opposite. Everything's still looking very bullish. The price action and the trends are very bullish, and we're doing technical analysis and we're staying objective. And as long as the price action is telling us that the stock market's going to go higher, we're going to keep calm and continue to let our money make money for us. So please remember to smash that like button if these videos help you out, and subscribe to the channel to follow along on all of my updates. We do these videos for you all week long to keep you in the know. So thanks for watching, everybody, and as always, I will see you in the next episode.